Hello again, fellow BeachBum traders. Thank you all for joining us for part one of our weekly trading game plan for the trading week of November 6th through November 10th, where we'll try to help you make money trading in November. I apologize. Sorry for the delay in starting our live stream. I hope you all will bear with me as I'm still getting set up, and we'll try to make do. Again, our internet was out all morning and we had intermittent power outages. I guess it was due to our cable provider. So again, I hope you'll bear with me as I try to get set up and struggle through this, and we'll go as long as we need to get through part one of our weekly trading game plan. So here's our notes for part one of our weekly trading game plan for the trading week of November 6th through November 10th. We keep our notes in publicly accessible Google Drive, Google Documents, and you can find a direct link to the Google document for this week's weekly trading game plan in the description box below. Also, we keep all of our notes for this week as well as previous weeks in a publicly accessible Google Drive folder. And you can find a direct link to that Google Drive folder also in the description box below. So again, you can refer back to the notes for this week as well as previous weeks, etc. So again, thank you for your patience while I try to get going. It's glad to see you all were able to start the chat. I see Easy Mike, Walter Lyons, Alan Krentz, MD, Gerald Fitz, Brian Moretz, The Crow. Glad to see you all were able to start our weekend brainstorm, our think tank, as you all call it, without me. So again, I'm glad to see this was productive for you all already, and we'll try to do what we can to get through our weekly trading game plan for this week. Again, our goal for this week's weekly trading game plan is to help you make money trading in November. So first, we'll look at how the markets performed last week. We'll talk about the Fed interest rate decision and some of the notes that I took out of that. And then again, our strategies, trade ideas for making money trading in November. So we'll jump over to FinViz. We'll look at how the markets ended up on Friday. So again, nice rally after the Fed meeting, as we'll see. So all the indices ended up. Dow 0.66 up, NASDAQ 1.4 up, S&P up almost 1%. We had 80% advancers, 15% decliners, 40% new highs, only 30% new lows. We've now got 46% above their 50-day moving average, 54% below, and now we've got 35% above their 200-day moving average. So as we can see, we had quite the rally after the Fed interest rate decision, and where we didn't get any tricks. All we got was pretty much treats from Chairman Powell and the Fed. Also, if somebody give me a thumbs up in the chat if the volume's okay, if everything with the broadcast is okay. If I do cut out and if we lose internet again, I apologize, and we'll do what we can to make up. So we see the heat map. Most of the mega cap tech, the Magnificent Seven, did well. Apple was down more earlier as they had declining sales for like the third or fourth quarter in a row. Slow in China. We'll talk about China in a little bit. But otherwise, the rest of the Magnificent Seven outperformed. Thank you to Ricky Kahn, Alan Krantz, for letting me know we're okay on volume, etc. And these were more green earlier in the day. We had almost all green at certain parts of the day. You can see energy was the weak sector, and we'll see that in the groups and industries as well. Some of the news: Buffett's cash hit record. Had a earthquake in Nepal. Dow scores best week since October 22. best week since best week of 2023 after the jobs report for all the indices. Saw oil decline. It was now range bound between 80 and 85. So we did see a decline in oil. There's some comments out of Hezbollah about not escalating the war, and that seemed to trigger that decline. Natural gas has been range bound between about 340 and 360. Again, we'll see the upward trend. Gold still struggling to break and hold above 2,000, keeps testing that 2,000 level and then dropping just below. But again, it's continuing to test that upward trend and break 2,000. See, all the indices are pointing up, all the indice futures. We saw a real dramatic decline in the Treasury yield. So prices went up, yields went down. So you can see now the 10-year is significantly, it's at 4.5. It was breaching 5 previously. So we saw that dramatic drop in the Treasury yields. So TLT had a significant run. We also saw the dollars still sitting, DXY still sitting around. Was around 106, broke down, I think, below 106, might have broken down below 105 at this point. So we had rallies in the foreign currencies, even in the yen. So now we'll look at the groups, the sectors, etc. Thank you again all for bearing with me. I'm still trying to get set up on other machines while we're going. So again, for the groups and the sectors for Friday, everything was in the green. The best performer was real estate, consumer cyclicals, basic materials. Real estate had a nice couple-day rally. Again, these are some of the trends we've been talking about when we talked about skating to where the market's going. We identified some of these trends, real estate being one of them, utilities being another, retail being another. So these, again, were trends that we were watching for that swing back up, and now we're seeing the outperformance in real estate. Again, utilities, technology is going to, rally with the Magnificent Seven. Again, the weakest sector for the week was energy, although it was even positive for the week. And as you can see for the month, utilities, energy, basic materials, real estate, and healthcare was the weakest for the month. And for the quarter, energy was still the outperformer for the quarter. So again, we're seeing that sector rotation somewhat out of energy. Again, that's the decline in oil prices. We do have a seasonal trend where energy is positive. So at some point, we'll expect this energy to rotate back, or the sector rotation to rotate back into energy. Industry-wide, we see gold and silver had a pretty good day on Friday. See the REITs, real estate. So again, we see that sector rotation into the REITs. Again, several of the REITs are really performing well now. Again, that was a trend that we've been watching to skate to where the market's going, and we identified that as an opportunity in terms of that turnaround in real estate, swing back up in real estate. Uranium showing negative, but if you look at the uranium stocks, they're still relatively high. It's just a relative decrease in uranium. And again, some of the oil and gas. Again, REITs positive for the week. More REITs. Steel makes some recovery. And again, showing silver negative for the week. As we'll see, silver keeps trying to break above 24, bounce off 23. So it's pretty range bound between 23 and 24 at this point in time. For the month, again, gold, uranium, oil, okay for the month. REITs moving up the chart. And the worst performer, solar. Again, solar's been very negative, although they still do continue to try to run Solar from time to time saw bounces back in some of the severely beaten down solars, but the guidance in general is very poor. Still high interest rates, high capital requirements for the quarter. Again, uranium's been outperforming coal as well, oil for the quarter. And again, the REITs for the quarter were poor, utilities turning around again. And again, we see solar, etc. So I hope that helps. Just checking the chat real quick. Again, just getting some of my banners set up. Okay, so we'll talk about the economic data that came out this week. I'll talk about some of the comments that I noted from Chair Powell's press conference. So we'll look at the economic data coming up this week. Let me grab a quick drink and we'll go through all the economic data. Okay, not a lot for Monday, Tuesday, and again, the markets were kind of waiting for the Fed interest rate decision on Wednesday. As we saw, we got, no tricks. They held steady, didn't up the rate, so they're still on hold at this point. Rates steady at 5.5. So again, we got, a treat from the Fed. They didn't hike, even though some of the inflationary data was a little high coming into this meeting. Again, they are holding steady. Sorry for some of the background noise. If that's coming through, I apologize. Some of the comments that I noted coming out of the press conference: strongly committed to returning inflation to 2%. So again, they're holding steady at their 2% goal, as we pretty much speculated. The full effects of tightening are yet to be felt. So part of the reason they're holding is to see what the effects of their previous interest rate hikes will be, and we'll see some of that coming out. Given how far we've come, FOMC proceeding carefully, so they're still not ruling out. You can see could warrant further interest rate hikes, so they're still not ruling out future hikes, but they're saying, as we predicted, they're going to be data dependent, and based on the data, they'll make their decisions on a meeting by meeting basis. So again, they didn't rule out future hikes, but there's no indication that those are imminent. Long way to go to get inflation to 2%. So again, they realize inflation is still too high. Their goal is still to get it to 2%. Labor demand still exceeds supply. So although we're seeing the labor market come more into balance, there's still some imbalance where there's still demand that's exceeding supply. Not confident they've reached their stance for 2% inflation. So again, there is a possibility of further interest rate hikes to get inflation down to 2%. Economy's been surprisingly resilient, so again, they're not too worried about recession, and some people commented that recession's kind of off their radar at this point. We're not thinking or talking about rate cuts. So although the market keeps pricing in rate cuts, the Fed officials are saying they're not even thinking about rate cuts. So an expectation of imminent rate cut like in 2024 is probably somewhat delusional. This was a positive, again, a treat for the market. We are close to the end of the cycle, and I think that's part of what caused the market to rally so strongly after this Fed interest rate decision, as even though they're saying they might raise in the future, I think the market is believing that they're done, and they're stating they're close to the end of the cycle. So we saw again Treasury yields drop, TLT rallied, markets rallied, etc. And they're not changing their QT, so they're not considering changing the rate at which they run off their Treasury bonds. So that still is a demand deficit in the Treasury bonds. Another thing we got on Wednesday was the statement of the rate at which the Treasury expects to release further bonds, and that was slightly lower than expectations. So again, less supply in Treasuries than was possibly expected or feared. And so another reason TLT rallied, the Treasuries yields declined, prices rallied, and the markets rallied. Then on Thursday, we got some job data. Initial jobless claims are slightly higher than expected, continuing slightly higher than expected, but not dramatically. Job cuts was less than expected, so fewer layoffs, more people still, people that were looking for jobs are struggling a little more to find jobs, and we had a few more initial jobless claims. Average went up a little bit. Some positive numbers, though, is that labor costs went down more than expected, and productivity went up more than expected. So again, all positive, all treats for the market, and again, more fuel for the rally we saw after Wednesday and Thursday, pretty much all week for the markets. Friday, we got some more job data. Average hourly earnings was up a little more than expected year on year, but less than expected month on month. Again, positives in terms of wage inflation. Payrolls, non-farm payrolls was lower than expected, so new jobs, again, less than expected. So the job market is coming more in alignment. Unemployment up a little bit. Unemployment rate at 3.9, a little bit higher than expected, and the U6 unemployment at 7.2, and participation steady at 62.7. So again, kind of expectations of tightening of the labor market coming more into a line, but not dramatic increases in unemployment. So again, these were all perceived as positive from the Fed's standpoint going forward. And again, not dramatic increases in unemployment, again, were viewed as positive. So we got a nice rally again on Friday. So we'll look at the rest of the economic data from last week, and then also what's coming up for this week. Okay, so Monday we saw some bill auctions that were a little weak. Tuesday, again, we got employment data. Cost index was pretty much in line. So again, we're watching for indications of wage price spirals, wage inflation. Not a lot of evidence of that. Home prices increased slightly. Make sure, yep, I've got this week good. Crude oil production pretty much in line. And the 52-week bill auction was a little better than expected. Crude oil stocks was less than expected. So again, but the oil prices more are based on the political turmoil in the Middle East. 30-year mortgages dropped a little bit, and then we'll expect to see those drop more as the Treasury yields decreased. Here's the ADP data, again, a little bit weaker than expected. Manufacturing is still kind of negative, so again, slowing economy, but not necessarily a fear of a recession. Job openings, the JOLTS job openings was a little bit above expectations, but again, not dramatic. Crude oil inventories are down more than expected, which we would think would pump the price up, but again, seeing that oscillation between about 80 and 85 right now. There's the Fed decision, job cuts we talked about, car sales down, truck sales down a little bit, durables down. So again, slowing economy, factory orders were a little up. Natural gas storage is pretty much in line, a little less than expected, but pretty much in line. So we saw a little bit of a volatility around that, but again, the trend seems to be up. Again, we're starting to get Fed officials coming out now. I think Barkin or one of the other Fed officials was talking on Friday as well. We talked about hourly wages, payroll data, ISM manufacturing, less than previous, but still above 50. So let's see what we've got coming up this coming week. So more bill auctions, import exports. Again, there's Fed officials they're all gonna come out and start talking. So that might cause some volatility if we hear further expectations of future rate hikes. Mortgage data on Wednesday. There's got a Powell speech, so people will be watching that one. I don't expect, him to say anything different than what he has said, and which it wasn't any different than what they have been saying in general. So we get crude oil inventories, etc. Here's a 10-year bond auction. We'll see how that goes. And we get jobless claims data again on Thursday. And then we get Michigan sentiment. Now, the past couple times, this Michigan sentiment has moved the market more than it has in the past. We'll see if the consumers' expectations for inflation come down any, and if their sentiment improves. Again, that may cause some volatility. Then we get rig counts on Friday as well. So we're still in the heart of earnings season. I'm not going to go through the earnings calendar. You can very easily go through the earnings calendar also on investing.com. Just flip over to the earnings tab. You can then scroll through and search for everyone that's going to be reporting earnings next week. Again, we're right in the heart of earnings season, and you can really see how not only do the top line earnings matter, but also what their guidance is, what their sales trend is. You saw Apple had record revenue, record sales, etc., but it's decreasing. Several of these companies, like the solar companies, their guidance going forward was poor, and they get hammered based on that. Most of the companies are tending to beat earnings estimates, and again, part of that is inflationary. That inflation causes their sales or revenue to go up in number of dollars. But again, if there's showing slowing going forward, that's going to be negative as the market's forward looking. So again, I'd recommend you can listen to our previous video about how to trade around earnings when earnings matter again, and they definitely matter significantly. You can also watch for sympathy plays with other stocks in the same sectors and industries and play those accordingly. So again, got plenty of earnings still upcoming. I believe NVIDIA is still outstanding and coming up. That's going to be a major one. They got more restrictions on their sales in China, so we'll hear what they say about that, although they do have a tendency to beat on their top-line earnings numbers. They've announced, pretty dramatic guidance. Their increase in guidance last time caused a big pop in NVIDIA and the semiconductors. So again, something to watch out for when NVIDIA reports. I'll see if I can find them. Nah, I can't find them right now. So you see Alibaba too. Again, we will talk about China. That's going to have an impact on China, the China ETFs, etc. So again, you can go through this list, find stocks of interest to you. We'll also see a shorter list in Webull in a minute. Just another quick reminder that the next FOMC meeting is until December 12 and 13. So again, none of this should be considered financial advice. We're not financial advisors. All this is my opinion. And again, you can take it for what that's worth. But I think the treat we got from the Fed not raising interest rates and the economic data that we've seen so far, the overall trend that I see going into the markets, and we'll look at the indices quick a second, is I think we're going to get a positive run from now until the next Fed meeting. So let's look at the indices. Okay, the Ricky Khan says NVIDIA earnings are November 21st. Thank you for letting us know that. So not this week, but a couple weeks from now. So again, here's the SPY. We see that's strong rally right after the Fed decision. We've got several gaps up, jumped up over its moving averages. Looks like it just breached that 50-day moving average, and it's going to bounce back down to support a little bit. Look, I see that strong pop, and looks like it's testing the 20-week moving average around 440 or so. Again, this is my opinion, not financial advice, but I would not be surprised to see some retracement, some correction to fill these gaps, etc. We had such a strong run in these indices. I think some level of retracement correction would not be unexpected. Qs, again, very strong. Looks like it, again, went up to that resistance trend line and got resistance. Again, you see that strong rally. So again, I wouldn't be surprised to see a slight correction. Again, it didn't quite reach the previous high. We might get a little bit of a rally up to test that previous high and then possible correction. Dow, again, very strong, went up to that 20-week moving average. Looks like it hit resistance there. Looks like it breached its previous high. So again, I wouldn't be surprised to see some resistance at that level, a slight correction. But again, in my opinion, I think now, at least until the next Fed decision, and in my opinion, I think now through the end of the year, we can expect an upward trend, an upward rally in the markets. IWM, again, very strong, positive reaction. It looks like it's found a bottom here. It hasn't quite tested its previous high, but again, very exuberant reaction to the Fed interest rate decision and a very positive pop in the IWM. Saw a dramatic drop in the VIX. The VIX had been testing right up around 20, and as soon as that decision came, it dropped, and I think it's actually below 16 at this point. So if anybody is really nimble, able to trade the short on the VIX, like with SVXY, if you were quick and caught that dip, boy, you can make a lot of money on that dip. Okay, so we talked about the indices, all that. Let me get the market screen up on Webull, grab a drink. You guys, it's great again to see the community able to go on and have our little think tank on the weekends, even if I'm not able to participate. So, do you guys even need me? Okay, just because since I've got this up right now, you can see this banner popped up on my online browser version of Webull. And you can see now Webull's offering options trading like they had in their desktop version, now also in the online version. So again, now you can more efficiently trade options in the online browser version in Webull as well. So okay, so this is the market screen in the online browser version of Webull. We like to also use that for some of our market analysis. You can see Friday we had a lot more advancers than decliners, pretty strong level of advancement, so significant percentage of advancement. Decliners in general were very small. Although the net inflow, again, the same trend we've been seeing on Friday is we've got inflow in the NYSE. We had some and the outflow in the NASDAQ. So again, probably a lot of profit taking in the Magnificent Seven, etc. So even though we saw that positive trend in the NASDAQ, again, we're seeing money flow out. Again, probably profit taking. Again, you can see the near-term earnings calendar here in the calendars tab. So someone was mentioning Berkshire has earnings today. So that will be interesting to hear their comments. I would expect the earnings to be generally pretty good. See who's coming up on Monday. So again, you can keep a near-term view of the earnings, whether they're before market open, after market close. Also here on the market screen in Webull. We'll look at the best performing industries for the week. Most are going to be, pretty positive. Uranium very positive. Okay, again, all the, majority of the REITs did very well. Semiconductors. Networking, pretty good. Infrastructure, utilities. So again, utilities, construction. So again, real estate, we saw that swing back up in real estate. Retail positive. Again, trend we were talking about watching. Again, construction positive. Look at the ETFs. So the market's up on the Russell. So you see the strongest trend now is up on the Russell. So again, a real exuberant turnaround in the Russell. Again, another one of the trends we've been talking about, watching, skating to where the market's going, a seasonal trend. And now it looks like that's manifesting in the Russell as well. Again, we've been talking about TNA, watching TNA. Up on the Dow. Small cap now positive, small and mid cap. So again, a real turnaround in the sentiment in small and mid cap. Looks like some new leveraged ETFs they've got under volatility up on the euro. They've got a short on Bitcoin, so Bitcoin rallied as well. But now they're betting short. Up on the yen. Again, up on the Russell, up on small cap. So again, big turnaround. China positive, Europe positive. Again, S&P, small cap, mid cap. And again, up on the Q. So again, the sentiment right now is all positive. And again, we see a big turnaround in the small and mid caps. Industries for Friday are going to be mostly green, except for energy. So a bounce in lithium miners, very beaten down as well. So food and beverage, again, real estate very positive. REITs, even financials, again, financials been severely beaten down. So, they're really looking for anything that was severely oversold, beaten down, and jumping into that for outsized gains. Commodities, coffee, agriculture, gold, sugar. Investment grades, so bonds, preferred, high yield, municipal, so a very change in the bonds. All the foreign currencies are up against the dollar. Again, we saw that dollar weakening, so all the foreign currencies are up against the dollar. So just a quick reminder, as you saw, they keep adding features in Webull. We use Webull for our market analysis, our due diligence, the majority of our trading. If you're not already using Webull, you can still get up to 6 free stocks on deposit. And they're also still offering 5% interest on uninvested cash in your cash account. So if you're not already using Webull, we would recommend it. We use it. And if you would use our affiliate link in the description box below, you can also help support our community, and we greatly appreciate all of your support. I will quickly also look at the futures. Probably going to, I'll probably delay and look at ETFs tomorrow. So again, we see these strong rallies in all of the indices. You can see the Dow almost tested its previous high. S&P hasn't quite tested its previous high, nor has the NASDAQ or the Russell. Again, we see, it looks like they finally established a pretty clear bottom. Looks like a pretty nice tweezer bottom on most of these futures charts. Strong rally upward. Again, I wouldn't be surprised to see some level of resistance at the previous highs, some retracement, some correction, but then a longer-term rally, going into at least the next FOMC meeting and possibly through the end of the year. See a bounce in all the foreign markets. The Nikkei really had a strong bounce. See oil, again, pretty range bound between 80 and 85 right now. I expected, to bounce around in those ranges. Natural gas, again, range bound between 340 and 360, although, again, the longer-term trend is definitely upward. Welcome, Douglas PC, Sydney Osborne. If I missed you before, thank you for joining us. Again, you can see gold, working on trying to break and hold support above 2,000. Once it can hold that support, we would expect another leg upward, although it'll get resistance at its previous high. Again, silver trying to establish support at 23, test 24. Again, we expect, chop until it can break that 24, and then another leg upward until it tests its previous high. See a rebound in the cattles. Corn was looks like it tested that previous bottom, bounced nicely. And we see, it looks like wheat has swung upward. Again, we've been watching that. We'll talk tomorrow about our swing. We're now long wheat using the WEAT ETF again. Again, another swing we've been watching. Lumber bounce. Again, we saw that strong reaction in the bond prices. Yields dropped. Bonds prices bounced. So bounced very strongly. It looks like the 30-year broke just above its previous high. 10-year broke above its previous high. Again, with these strong runs, I wouldn't be surprised to see some level of correction, retracement, and then a continuation in the upward trend in bond prices, again, at least until we get to the next Fed meeting. We'll have to see, though, what the Treasury does in terms of increasing supply of bonds and how those auctions go. Again, we see the yen finally bounce, found a bottom and bounce. They, loosened up a little bit their bounds on their restrictions of the GBJ, the government bonds for Japan, and caused a little bit of a bounce in the yen. So again, we saw the dollar, finally broke down below that 106. Looks like it broke down below 105. Again, those should be positive catalysts for all your dollar-denominated commodities, which be gold, silver, oil, etc. So again, we've been waiting for that breakdown in the dollar. Again, those should be tailwinds now for the dollar-denominated commodities. Okay. Again, tomorrow, I'm going to defer our discussion on ETFs till tomorrow. Again, I apologize for the late start due to our internet outage. I want to grab a quick drink, and we'll talk about our trends and strategies. Okay, again, our theme for this week is how to make money trading in November. We did a longer video previously last year, I believe, on how to make money trading in November. So I'll just refer you to that more detailed video. It talks about how November is one of the best performing months of the year. That is one of the hot months for stocks. It also covers the sectors and some ideas of individual stocks to trade for November, and also talks about how to make money trading during Thanksgiving, Black Friday. We also have a video specifically about how to make money trading during Thanksgiving week. So rather than to reiterate those same comments, you can refer to those videos via the link in our notes, as well as I think you can find those as well in the description box below. You can see in the chart that we typically look at for the monthly historical performance of the stock markets, how November, December, we talked about October. This October was significantly poorer than historic averages. We talked about, the downtrend September into October, and then typically a bounce in October. Again, this October was much more negative than historically. You can also hear our short videos we recently released about how the markets typically perform in November, and some of the best performing sectors and industries in November. So again, rather than to reiterate that information, you can access that all via the links in our notes as well as the description and on our BeachBum Trading YouTube channel. Also, we have several videos out, long and shorts, on how to make money trading this fall. So additional information about the seasonal trends for the fall. Tomorrow also we'll talk about dividend payers and our option strategies. Okay, so I do have some time. I'll go ahead and we'll talk about ETFs today, just very quickly. Easy Mike wanted to talk about China, so we can refer to some of those ETFs for China. If anybody else in the chat has specific ones they want to take a look at, if you throw those back up in the chat, we can take a look at those. I did have some other additions that people pointed out that I'll try to quickly cover. So first we'll cover China. Again, our typical ETFs we trade China with are yen, long, yang, short. I know there's several of our fellow BeachBum traders that are very good at the short-term scalping, day trading in these. Again, every day there's an opportunity. It's like, is it a yen day or a yang day? Again, you can see some of that in the global markets. If you look in the global markets tab in Webull, you can see, whether the Asian markets are up or down. If they're up, chances are it's probably going to be a yen day. If they're down, it's probably going to be a yang day. We do have a number of other ETFs that you can trade China. So if there's something else, a category that you'd like, if you want internet specific, etc., we even have a biotech specific, biopharma specific ETF. So again, and we heard, from Apple, even though the Chinese economy is growing slower than expected, they're still buying Apple products, still buying iPhones, etc. So again, somewhat of a status symbol, etc. Although the government in China is, trying to restrict foreign iPhones, etc., from their government officials. So there is a risk of further negativity in terms of foreign production in China. So is there something else you wanted to talk about in terms of China, Easy Mike? Again, here's a number of ETFs you can use to trade China. There's some shorts, another short one in addition to Yang. A couple other quick comments. Last week, the Crow mentioned another way to short gold, so GDXD. So I did the research on that in our research tab and also added that to the main ETFs Google Sheet. So you'll see, if we look at gold now, I'll probably put it at the bottom. So here's GDXD. So we did the research here in the research tab. Looks like it's got pretty good risk reward. So now we can compare that to the other ETFs we have for longing and shorting gold. So you see we have several. There's GLL, DZZ, Dust. So here's all the ETFs to short gold. Again, we're seeing, gold is going to probably test its previous high. So if you want a short term and try to, trade a reversal in that, you can see GDXD has a pretty nice risk reward profile. Dust, it's a little bit better than Dust. So Dust seems to be the popular one. They're both on gold miners. This is a little bit different. It's a double short on ETN. And this is an ultra short on gold itself. So again, you can compare the risk reward profile of these various ETFs to short gold. But again, GDXD looks like a good alternative to have in our main ETF sheet. So thank you again for pointing that one out to us, the Crow. Also, Douglas PC mentioned in our Discord last week, and I will bring up that message, and you can also see our Discord. A reference to a number of war-related ETFs. So what we did is we captured that list of war-related ETFs, put that in the ETF database. So it's a list from the ETF database. So we captured that, put it in the ETF database sheet. So you can compare the various war-related, the risk-reward profiles, 52-week risk-reward profiles for these various war-related ETFs. So you can see it's, most of them are very small, 52-week movement, very small, 52-week risk-reward. The exception is DFEN, and that's the one that we've had in our main ETF Google Sheet for aerospace defense. ITA is also a very popular one. But again, if you're interested in any of these other, quote, war-related ETFs, you can see their 52-week risk-reward profiles. You can track their pricing during the day, and you can also see their perspectives via the links in the notes column. So if you're interested in any of these other, quote, war-related ETFs, you can reference those in the ETF DB sheet in our Google Sheet. And again, we have DFEN is the main one that we watch for the aerospace and defense sector. So thank you again, Douglas PC, for sharing that reference to these, quote, war-related ETFs. We appreciate it. And again, you can track those in our ETF Google Sheet. Just a quick reminder, if you'd like 24/7 access to this ETF Google Sheet, as well as our dividend payers and our puts ROIC Google Sheet, which we'll look at in more detail tomorrow. You can get 24/7 access to that, all of those Google Sheets by joining our Patreon at the All Access or VIP level. So again, we hope that all helps. So again, if anybody else in the chat, just a quick reminder, our Discord is free to join. You can find an invite to our Discord also in the description box below, also on our homepage, beachbumtrading.com, bum without the U, in the links section. Again, you can find link invite to our Discord, as well as links to all of our social media groups, etc., our Facebook group, Reddit community, and all of our social media sites. So if you have an idea or you'd like us to do research on other ETFs, you can contact us, put comments under this video or in our Discord or via any of our other social media sites. So again, if I missed your question or comment, or if there's another ETF you'd like to look at in our ETF Google Sheet, a different category, etc., I can quickly look at the technology sectors. This was kind of interesting with the bounce as well. And again, you can find this chart in the Screeners tab in our ETF Google Sheet. So I found it very interesting how well all of these ETFs, these are ETFs that are long the various technology sectors. So we've got FANGU, LabU, SOXL, TQQQ, how well they respected these channels. So they touched the bottom trend line, bounced up to the top trend line. You can see how the moving average is coinciding with that upper trend line. So they all pretty much bounced off that lower trend line and bounced back up. So again, I wanted to measure that because they've got a bounce in Lab U. I would expect a rejection back down too, and then retesting that lower trend line. So again, they seem to be respecting these channels. So hopefully these charts will help you identify support and resistance levels if you want to short-term day trade, scalp, etc. Any of these. Again, the inverses of these we have in our Google Sheet as well. So FANG U, it's FANG D, Lab U, the inverse is Lab D, SOX L, inverse is SOX S, and TQQQ, the inverse is SQQQ. And again, you can find those and track those all in our main ETF Google Sheet as well. Yes, Alan Krebs, we looked at natural gas, and yes, the long-term trend is up. Again, in the futures, we see, it's range bound right now between 340 and 360. Have to break above 360 to continue upward. And again, you can trade short-term, trade natural gas with boil long, cold, KOLD short. Also have UNL, UNG, etc. Oil, we saw oil's bouncing between 80 and 85. Again, you can short-term trade long with Gush or UCO, short with DRIP or SCO. Talked about Lab U, Lab D with biotechs. We talked about that. We've been watching this trend in real estate. So DRN, you see DRN had a nice run on Friday. So again, short term, and we'll talk about this more again tomorrow. The trends in real estate, retail, utilities. Again, retail is the preferred ETF for longing retail. RETL, clicks are online for online retail. See the Russells, S&Ps. Again, silver, if you want to, short-term trade silver, AGQ long, ZSL short. We talked about golds. Talked about the Treasury, the bounce in Treasury. So TMF is a leverage long on Treasuries. See the bounce in TLT, the short for, again, very short term. If we get a correction, some people prefer TBT or TMV. Talk about wheat more tomorrow. You can also see the yen got a little bit of a bounce. So, if you want to long or short the yen. So again, I hope that all helps. So again, if you have any other ETFs you would like us to do research on, or any questions about ETFs we use for a particular category, commodity, indice, etc., you can put those in the comments, or again in our Discord, or contact us directly via social media. So again, I appreciate all of your patience today as we had some connectivity issues, got started a little bit late. I'm glad we were able to get through our part one of our weekly trading game plan today. Tomorrow we'll come back and we'll select our top swing trading stocks to watch, stocks in our bullpen. We'll also talk about dividend payers and our puts, or our various option strategies. And if anyone has any questions or would like us to take a look at an individual stock, again, you can put it in the comments to this video, in our Discord, etc. So we hope you like the content we were able to present today. Again, my apologies for the late start. I hope you found it valuable. I hope you'll smash the thumbs up button. Hope you'll share this with your fellow traders and friends around the internet. Let's keep growing our community. You can see how great it was that even when we weren't able to present, our BeachBum trading community was able to have a productive chat in the live chat. And thank you all for sticking around and helping each other out, and also again sticking around for our live stream today. So please let us know what kinds of improvements we can make to our weekly trading game plans, our videos, our community, our systems, etc. And we'll do what we can to make those improvements. And hopefully, if we don't have problems again tomorrow, we will see you all back for part 2 of our weekly trading game plan for the trading week of November 6th through November 10th. Just a quick reminder, at least in most of the country, tonight is the fall back of daylight savings. So again, we'll be here at 10 a.m. Eastern time after the fall back. So at 11 a.m. will become 10 a.m. and we'll be here again at 10 a.m. Eastern time. So don't forget to set your clocks back and appropriately. So we hope this all helps. We hope you like this content. Please, again, share this. Let's continue to grow and improve our BeachBum trading community for the mutual benefit of all of our fellow BeachBum traders. And again, thank you all very much for sticking around and sticking with us as we struggle through this weekly trading game plan today. Have a great rest of your Saturday, and I hope to see you all again tomorrow. Bye.